So welcome back again. So we start from where we stop. We are looking at the solution to the question, and that's Dongo Limited statement of cash flow for the year ended 31st December 2020. So we have been able to ascertain or determine the profit before interest and tax, and that is 180,200, and that's what we refer to as operating profit. Now we go to adding depreciation uh, to this very profit before interest and tax, which is the next thing for us to do. Now, if we go back to this question, it is obvious that we were not given the depreciation for the year. And that is how technical some of these questions will come to be. Now, how do you determine the depreciation for the year since you were not told? Now, we were told that there is an accumulated depreciation. There is one for 2019, there is one for 2020. How will you know what the depreciation for the year is? It's very simple. All that you need to do is to less the opening from the closing, and it will give you the depreciation for the year. Let me take that again. We were not given depreciation for the current year in this question. How will you know what the depreciation is? Now, the accumulated depreciation for 2019 is 109,340. But look at it. We are now closing with accumulated depreciation of 152,650. The difference between the two will tell you the exact depreciation for the year. So when you take 152 from 650, 152,650 from 109,340, it's definitely going to tell you what we have. Somebody should please punch the calculator. What do we have?
43,310.
43,310. I hope you understand how we got that. 43,310. So that's what we have here. That will give us cash flow from operations before workings and capital, because from this question, there are no other adjustments. From this question, there are no other adjustments that we need to make. There are no other adjustments that we need to make. There are no provisions. There are no loss on disposal. And then there are no amortization. There are no increase in provisions. So that is that for that. So it's very straightforward. That's how we got it here. Now, there was also something I did when I was solving this question. I have the precision chart for the year. I put the amount 152,650 minus 109,340. This is allowed. You don't need to go and do workings. You can easily put it in jacket and write it 152,650 minus 109,340, and that gives you this one. So when we add the two together, we have 223,510. So we now go to changes in workings capital. Changes in workings capital. And I told you, when there is an increase, a decrease in inventory or other current asset item, what do? You add it. So let's go and check. Do we have decrease or increase in our inventories? Now, this is where we have. How will you know if there is a decrease or an increase? You always less the opening from the closing. Now, in this question, we were told this is inventory. We have 107,430 for the 2019, and we have 96,220 as our closing for the year 2020. Meaning, the closing, remember, the closing for 2019 will be the opening for 2020. So, somebody should less 107,430 minus 96,220. What do we have?
11,210.
11.
210.
210. This
Yeah.
11,210, is it a decrease or an increase?
It's decrease.
Is decrease. Thank you. Now, the simple meaning is this. If there is a decrease, it means there is an additional cash inflow into the operations of the entity within the year. Please understand that. Let me take that again. If there is a decrease, why do we add it? It is because there is an additional cash inflow, meaning there is an inflow of cash into this. We receive more cash from our customer. And that is what we use to trade in the business for the year. Is that taken? Thank you. Are there other non-current, are there other current assets that we need to check? Yes, there are. Now look at it here. B receivable, the same thing as your receivables. The opening is 68,100. And then the closing is 92,610. Oh, sorry, we actually look at inventory, right? Inventory, that's what we look at. So meaning that we had more sales of our inventories. Now we are looking at receivables. Receivables are the one we are receiving from our customer. Opening is 68,100, and then the closing is 92,610. Please remove this 68,100 from 96,610. What do you have, please? Are we still together?
24,510.
Is this a decrease or an increase?
An
Increase.
increase.
It is an
Increase.
increase, meaning there
Increase.
were cash outflows. Is that also? Our cash were tied down, meaning we sell on credit, we did not receive our money back. Is that taken? Do you understand what I'm trying to explain? So the simple and the literary
Yes, sir.
meaning of why we have to less increase is because our money was we made sales on credit, a lot of them, and then we did not get the cash into the system, as it were. We did not get the cash into the system. That is the simple meaning. In other words, we started those that are owing us at the beginning of the year. The total amount of money is 68,100. But now, instead of us to close lesser than 68,000, we are now closing with 92,610, meaning there were more sales on credit. Cash did not come in, so you had it. I mean, you left it as it were. Now that is that for that. Do we have other current asset? Okay, we have prepaid expense. Prepaid expense. This also we are going to take care of it. Prepaid expense. At the beginning we have 17,000. At closing we have 17,200. Is this an increase or a decrease?
Increase.
An increase of how much?
200.
200. I mean, your head is hot tonight. I'm giving you 2 marks, 2 marks, please. 2 marks, that's good. So
Thank
that
you,
is
sir.
that for that. So we have a increase of 200, and then we have a decrease in the inventory. So meaning that our we have been able to determine the changes in the working capital under the current asset. So we have decrease 11,210, increase in bill receivable 24,510, increase in prepaid expense 200. Now let's go to the bills payable. Under the bills payable, the opening is 40,290, the closing is 69,310. You know, it's vice versa to that of receivable. In other words, you open your payables for the year with 40,290. You are now closing with 69,310. This decrease, as it were, implies that instead of you to be offsetting, what is it called? Well, to be offsetting your debt, you are increasing it. You understand now? You are increasing it. So this increase to a layman is a decrease to us as an accountant. Let me not bore you with all those stories. We started with 4290, we are closing with 69,310. Instead of the 4290 to be going down, we are now closing with 69,310. Please, let's go back to that question so that you have the understanding of it. Be payable. Okay. We started with, that's why I know that there was a mistake there. It's supposed to be 4290, I mean 69,310 minus 4290. So we actually have an opening balance of 69,310. We are now closing with 4290. So there is a decrease. Please, let's take note of all of this. Let's check all these current liabilities items. So we have B payables. We started with 69,310. We are closing with 40,290. Is this a decrease or an increase? Are we still together?
A decrease.
It's a decrease.
Yes, sir.
Okay,
Decrease.
take note of that. We also have other accrued expenses. We started with 8,250, and now we are closing with 20,630. Is that an increase or a decrease?
An increase. Increase.
An increase. And when there is an increase in current liability, what do you do? Do you add or less?
With less.
Thank you so much. Please clap for him. Clap for him. So that is that for that. So we have been able to determine the changes in workings capital. So you see that it's so seamless and very simple to deal with. So we have that. Decrease in inventory, we have treated that. Decrease in B payable. Decrease in B payables, we less. Increase in accrued expense, we had. And then when you do all of these adjustments, you have 3140. 3140. See, we're going to less our interest paid of 17,120 for it. Are we still together, please? Are we together? So when we less interest paid of 17,120 is in the question, I can take you back there very quickly. Interest paid for the year is stated there. We're told interest paid for the year in the profit and loss account. Interest paid is 17,120 with less. We also told that income tax expense is 37,000, but there is an additional information. Let's check if there's anything that they see anything on tax. Okay, they didn't say anything on tax on the additional information. So it is that same tax that we are going to less at the 3,000. Okay, I think there is a workings on that. Let's check out the workings. Oh yes, there is a workings on that because we have opening and closing balance on that. So let's check how we got this so that you can have the understanding workings. One, tax paid. We are opening balance for the year to be 32,300. If you go to that current liability section, you will see it there. And remember, when we did the last class, I explained to you how you are to determine your tax paid for the year. It is the opening plus the current year minus the closing. And so the tax for the current year, under the current liability, you always see it. The opening, sorry please. So we have it here. Taxation. Opening is at 2,300. And then the current year tax is 37,000. So opening plus current year minus closing, what will it give to us?
Tax paid for the year.
Yes, we are determining the tax paid for the year. So what will it give to us? I told you in our previous class that for you to determine the tax paid for the year, it is opening plus the current year tax minus the closing. And so we have it. You can still see it.
32,500.
32,300, please. Check very well.
That one, okay, 32, okay, 3,300 minus 300
32,300
plus
plus
37,500.
37,000 minus 37,000 will give you 32,300.
200.
Mhm.
Yes,
So
sir.
when you have this, you are going to have, when you have this, what we have, interest paid, when you less all of these, you're going to have 75. Please let's add together. This is it. when we net off the decrease and the increase in the changes in working capital, we had 30,140. You can help me do it. 11,210 plus minus 24,510 plus minus 200 plus minus 29,020 plus 12,380 plus minus 3140. It will give us 3140 as it were. You can do the adjustment and then you will always arrive at this 3140. I did this calculation so that we can have a seamless class, and then if you have any question, you can just ask me as it were. So interest paid is in the statement of profit or loss. You just carry direct, you less it. Then you also less the tax paid. That total will give us 79,560. Remember, we have cash flow from operating activity before changes in working capital to be 223,510, which is the addition of 180,200 plus 43,410, which is the depreciation for the year. And so therefore, when we take this negative balance of 79,560, we have net cash flow from operating activity to be 143,950. And that is that for that. So now let's quickly go to the investing activity. I told you, investing activity, usually when there are investment income, you had. When there are sales of PPE, you are going to carry the total sales value. That is the total amount by which the asset is being sold is what you will carry. You are going to add it. Then if there are purchases, you are going to less it. How will you know there are purchases in the year? That's why we have comparative statement. Usually to be your opening balance minus the closing balance. If the closing balance is higher than the opening balance, there are purchases. If the
Yes.
closing balance is
Yes.
lower to the opening balance, there are
That
sales. Are we still together? Somebody want to ask a question? Okay,
Please
thank you
just
so much.
repeat the last statement, sir.
I said how to know where there are sales or purchases of PPE is you compare the opening balance with the closing balance. If the opening balance is higher than the closing balance, that means there are purchases in the year. Do you understand now? So if the opening balance, for instance, is 10 and the closing balance is 15, that means there is an addition or a purchase within the year, and that will give us a 5 as it were. In other words, um, cash was moved outside, meaning there is a cash outflow. And if there is a cash outflow, you less it. If there's cash inflow, you had it. Okay, Benjamin, you are raising your hand.
Yes, sir. Please, sir, my question is on the prepaid expense. That's 200 naira we deducted. I want to really understand the rationale why we deducted 200. That's under the operating activities side.
Okay. Now, if there are increase in current asset item, you are going to less it. If there is a decrease, you are going to add it. The prepaid expense, the opening is 17,000, the closing is 17,200. Is that an increase or a decrease?
It's an increase.
So that's why we are lessing it. Do you understand?
Yes, sir. Thank you.
Okay. So we are in an investment activity. So we have investment income. Investment income is in the question under the profit and loss account, and the total amount is 8,100. And I told you, how will you know if there are sales or purchase on the asset? Now let's go to the question under that PPE. Please, okay, sorry, please 1 minute. Investment income is 8,100. You can see it here under the profit or loss after operating profit. You can see it there. And so we have PPE at cost. At the opening, we have 212,373,300. But what you do is you use a carrying amount. Use the carrying amount of the assets. So opening carrying amount is 102,660, and the closing carrying amount is 217,370. I'm sure you can see that there. So the opening is higher than the closing, meaning there are purchases during the year. And what do you do with purchases of an asset? Answer me. I'm sure we are together. What
Cash
do
is
you
going
do?
out. We deduct
Cash.
because cash is going out.
Thank you so much. Because cash is going on. So I'm giving you 2 marks, Benjamin, but you claim
Minus.
it.
Minus.
Thank you, Follow Shaw. I'm grateful. So that is that for that. Then under the current asset, there are no other asset that we're going to consider because investment at cost is 130, and then for the both year, meaning there are no addition, there are no subtraction. So that is that for that. And we have treated out of the current asset as it were. So we go to what is it called? The other side of the liability to check what we need to do there. And then what we have is loan notes. This loan note will be treated under the financing activity. And so I think that is that for that. There are no other items that we need to consider. And so our investing activity therefore will be the investment income of 8,100, and then purchase of PPE. When you net it off, you are going to have 158,300 minus 8,100 will give you 150,200. True or false? Please calculate. Then we have the financing activity. If we are correct, let me know. 150,200, is it correct? Are we still together?
It's
Yes, sir.
correct.
Please, sir, can I ask a question, please?
Please go ahead.
Yes, sir. Yes, sir.
Okay, my question is on this purchase of PPE. You said we should make use of the values under the carrying amounts, not the cost. I don't know if I'm correct or if I heard
Well,
you correctly.
well, that was what I said. You
Because
can
here I'm
use it.
seeing it's like you made use of the cost figures.
Cost figure, yes. Well, you can use the carrying amount. You can as well use the cost, but I will always advise that you use the cost. Why am I saying this? The cost itself it implies that it's synonymous with the purchase, that is the buying of the asset as it were, or the sale of if you are to determine the sales, I think it's better you use the carrying amount. But if you are to determine the purchases, use the cost. These are simple technicality that are also in this cash flow model of valuation. Now, if we use the carrying amount, I want to believe that we are still going to get the same thing. Please, let's try it and see. Let's go back to the question. Use this carrying amount. What do we have? This 102,660 minus 215,650. What do we have? Oh yeah, now.
We have 149.90.
One.
114,990.
Okay, 1,414,990. And where we here we have 158,300. What? I think what I did when okay, now I remember what I did. When I was doing the solution this way, I think I did it and I did not balance, and the differences was when I checked through with the current amount that I used. Okay. And then that was why I will advise, well, you can use the cost as it were. Is that taking place?
Yes, sir.
Please use the cost. Thank you for that question, please. So we have 370,300 minus 212,000 give us 158,300. When we enter, we have 150,200. And so now let's go to the financing activity. Any other question before we go to the financing activity?
Yes, sir. My question is, you mentioned that if it has to do with purchase of PPE, that it is cost. Then if it is sales, then it is carrying value. So how do we
Yes,
know if the PPE was actually purchased or it was sold from the
I ex
question?
I explained earlier. How you will know is this: when the opening balance is, lower to the closing balance, there is a purchase. In other words, if the opening balance is 10 and the closing balance is 15, eh, you will know that that is a purchase. There is an addition of PPE or asset, non-current asset, during the year. Now let's go to this question now under that PPE and see it for ourselves so that it can be more clearer. Now look at it here. We have PPE. Opening balance is what? 212. I'm sure you can see it. You know that of 2019 is 212. Then closing balance for 2019 will be the opening balance for 2020. 212 is what we started with. But we are now closing with 370, 300. So it implies that we actually bought or added additional PPE during the course of the year. Now, assuming that it is the other way around, where we have 370, 300 for 2019 and 212, 200 for 2020, it implies that there are sales during the year. So you always compare the opening to the closing to determine if there are if there are purchases or there are sales. Is that taken?
Yes, sir. Thank you very much.
Okay. So now let's go to the financing activity. There are no other questions. And the first one is proceed from issue of share. How will you know if there is a proceed from issue of share? You also compare the opening balance with the closing balance under the equity and the liability. Now, look at it here. Ordinary share capital of at 150 kobo. We actually opened the year with 105,000, which was the closing balance for 2019. You know the closing balance of 2019 will be the opening balance for 2020. We started the year with 105, but now we are closing with 135. That means there will be a proceed from issue of share, and the difference of 105 to 135 will give us what we call proceed from issue of share. That is that for that. Please take note. Then the second item that we consider is, let's go to the loan notes. Under the loan notes, we started with 55. We are now closing with 85. In other words, there are additional funds into the system. Now, let me take this very clearly now. When there are increase under financing activity, when there are increase in the cash flow item, let me use shares and loan notes as it were. When there are increase, this one you are going to add. Why? Because it increases the capital employed in the business. In other words, there are addition of cash into the system, into the entity's operation within the year. Let me take it again. When share increases or loan note increases, it implies that the capital employed in the business has been increased. And therefore, you are going to add it, you are not going to less it. Is that taken? Thank you. So we have it here. Proceeds from share 105. We started with it. We are now closing with 135. The difference is 30. Proceeds from issue of loan notes. We started with 55. We are closing with 85. The difference is also 30. Then you have dividend paid during the year of 85,870. That you see it in additional information. Under the additional information, you see it there clearly stated. Let's go back to that place so that you can see it. Sorry, please. Additional information. Look at it here. A dividend of 85,870 was paid during the year. This one, just as the name sounds, they say it was paid, meaning that one is a cash outflow. Cash outflow. So understand that even now, please help me check something here. Somebody should help me punch calculator under this. Sorry, please. Under this equity, help me punch calculator. This return earning 152,540 minus 200,850. What do we have?
48,310.
48,310. Okay, thank you. We will use that later. I will explain something to you when we get there. 48,310. Please don't forget it. So that is that. For that we have. I don't. There are no other adjustments, as it were, for dividend paid. And so when we net it off, what do we have? 30, 30, that's 60, and then we have minus 85. So we're going to see have 25,870. Is that correct, please?
Yes, sir.
Thank you so much. Now we have our operating net cash flow from operating activity. We have 143,950, and I told you operating activity plus financing. Plus investment activity or financing segment plus investing segment plus financing segment will give us a increase or decrease in cash and cash equivalent before opening cash and cash equivalent. Let me take that again. When you had operating activity plus investing activity plus financing activity, it will give rise to either increase or decrease in cash and cash equivalent before opening cash and cash equivalent. How will you know it's increase? If your answer is negative, that is increase. If your answer is positive, that is a decrease. Let me take it again. When you had operating activity plus investing activity plus financing activity, if the result that you have is negative, that is increase in cash and cash equivalent before opening cash and cash equivalent. If it is positive, that is decrease in cash and cash equivalent before opening cash and cash equivalent. So now let's take these three together. We have net cash flow from operating activity to be 143,950. Have you taken that? Are we still together? Class, are we still together? Okay.
Yes, sir.
All right. So
Yes,
hard.
sir.
Okay, hard one minus 150,200 to hit. What will you have?
Minus 6,250.
Minus 6,250. Then hard minus 25,870 to it. What will you have?
Minus 32,120.
Thank you so much. So that's what we have here. So I told you, if the answer is negative, it is what? Net increase in cash and cash equivalent for the year before cash and cash equivalent at the beginning. Is that taken?
Yes, sir.
Thank you so much. Now, the question is this. How do you determine your cash and cash equivalent at the beginning or at the end? At the beginning or at the end? Now, it is very, very simple. So let me quickly teach us how to do it. It's very, very important so that we know how we are going to do it. How do you determine it? How will you determine your cash and cash equivalent? It is like this. Cash and cash equivalent. Cash and cash equivalent. So so we have, for instance, in this question we have 2020 and we have 2019. Please follow me. So the first thing first that we take cognizance of is to go to your current liability and check if there are cash and cash equivalent. Cash and cash and let me just write C and C. You understand it? C and C E. Cash and cash equivalent. Now let's go to this question. Do we have any cash and cash equivalent in the under the current assets? We don't have anyone. Yes, we don't have cash and cash equivalent. You know what the cash and cash equivalent is under current asset. Once you see cash under current asset, once you see bank under current asset, what again? Usually this is what you see, cash or bank. Once you see there, add the two together, and that will give you your cash and cash equivalent. Also, if you see treasury bill under the current asset, please add it to it. So we don't have anyone as opening. So you put under 2020, you will put 0. Sorry. 0. 2019, you also put 0. Then you do cash and cash equivalent. Cash and cash equivalent. Under the current liability. Let's go. Do we have cash and cash equivalent under the current liability? Are we still together, please?
Yes, sir, we are.
Yes, sir.
Okay. Okay. Here we have what we have bank balances. Bank balances. So for 2020, we have 34,910, and then we have 27,900 for 2019. You can see it. So this is what we have for 2019. This is 2790 as it were. So you need it off. So you are going to always less the current liability from the current asset as it were. So if you less it, what will you have? Are we still together?
Yeah, we are, sir.
Yes.
Okay, give me figure now.
180.
Closing balance. This one is 34. This one will be minus 0 minus 34 will be what? Minus 34,910. Do you agree?
Yes.
And this one will be minus 2790. Or let's use jacket now, since we are used to jacket, so we'll not be writing minus. Are we still together, please? I'm sure
Yes.
you are not tired. So that is that for that. So the 2019 balance will be the cash and cash equivalent opening balance. Then the 2020 balance will be the cash and cash equivalent balance. In other words, everything that we are doing since, we must arrive at 34,910 minus 34,910. Do you understand it now? So usually I used to say, well, under exam condition, you don't need to go and know what your closing balance should be. You don't need to go and determine it. You understand now? But for you as someone that is working, if somebody should ask you to help you do it, the first thing first you need to determine is the cash and cash equivalent at opening and at closing, so that you will know what exactly you are to arrive at. But under exam contest, you don't need to go and determine. If you are not balanced, leave it. All that we are concerned about is, do you know the step? And you follow the step and give us a answer. That's why we don't say answer the question. We say attempt the question. Is that taken? Eh? So that is
Yes,
that
sir.
for that. So now, please take note. Our opening balance said 2019 closing balance will be the opening balance, whereas the 2020 closing balance will be the cash and cash equivalent at the closing. So let's go and do our let's go and close our account. Net increase in the year is 32,120. Cash and cash equivalent, what we got is 27 minus 2790. If you add the two together, you have minus 34,910, meaning that we are balanced. Are we not balanced?
Yeah.
And so that is that for that. So I think by this question now you have understanding of how to go about this. Any question before we call it a night? Before we call it a
Yes,
day?
sir.
Please go ahead, ask your
Sir,
question.
the return earning figure, you said we should hold it. So we are still holding it. We don't know what we'll do with the figure.
Which one is that?
Return
Okay.
earnings figure.
Yes, please.
That 48.
I want you to always be careful of retain earning in your question. Be very, very careful with it. Don't always adjust it except you are told to do so. Don't always adjust retain earning except you are told to do so. Why? Retain earning usually is gotten from accounting profit. And the
Okay.
adjustment we are making is for us to know what exactly is the cash profit so that we can compare it with the accounting profit. So it is not all the items that are under the equity that you are going to consider. It is only those that are relevant. For instance, the ordinary share, if there are share premium, you consider it. If there are revaluation, don't touch it. If there are general reserves, don't touch it. If there is retained earning, don't touch it. Is that taken?
Yes.
Thank you.
Yes, sir.
Amid Olalekan, you are raising your hand.
Yes, sir. My network gets lost when you are trying to explain when you had operating investment and finance. That if you have negative, I
If you
don't.
have negative, that is a increase in cash and cash equivalent for the year before cash and cash equivalent, before opening cash and cash equivalent. If it is positive, that means it is a decrease in cash and cash equivalent for the year.
Okay, sir. Thank you, sir.
Okay. All right. Any other question, please? Are we good to go? So thank you so much for the time that you have spent. I'm sure you have added knowledge. If you have any question, please, you can as well always contact me on the WhatsApp platform. This class was recorded, so hopefully we are going to upload it tonight or tomorrow morning. Apologies for all the other videos. I promise you, I will work on the videos. We are going to upload all of them. I promise you that. I will make sure I create time and do something about it, please. I've been very, very busy, and sometime last 2 weeks, 3 weeks, and